A young investor stares at a stock chart flashing green. Another checks cryptocurrency prices every few minutes. A business owner works 16 hours a day, yet still feels trapped. They all believe they're chasing the same thing: money. But one of the richest people in history spent decades chasing something completely different. And that difference changed everything. Most people spend their lives trying to earn more money. They negotiate salaries, switch jobs, buy expensive courses, search for the next investment, and wait for the day they finally feel financially secure. But Warren Buffett has spent more than 70 years proving that money is rarely the starting point. It is usually the result. The real question is, what creates money in the first place? And why do some ordinary people quietly build enormous wealth while others keep running faster without ever getting ahead? The answer isn't hidden inside Wall Street. It isn't a secret stock. It isn't luck. It's something almost anyone can begin building today. But almost nobody does. Imagine walking into a casino. Lights flash everywhere. People cheer. Machines ring with excitement. Every few seconds, someone wins. At least that's what it looks like. Now imagine walking into a library. Silence. Shelves full of books. People reading. Nobody looks rich. Nobody looks successful. If you asked 100 people where wealth is created, many would point toward the casino. Very few would point toward the library. Yet history suggests the opposite. Because real wealth rarely begins with excitement. It usually begins with learning. That sounds almost too simple. But simple doesn't mean easy. And it certainly doesn't mean common. From the outside, Warren Buffett's story appears almost unbelievable. He became one of the wealthiest individuals in modern history. His company owns businesses across insurance, railroads, manufacturing, energy, retail, and many other industries. Millions watch every move he makes. Every shareholder meeting attracts people from around the world. Many hope to discover his next investment. But here's something fascinating. Buffett himself has repeatedly suggested that people focus less on copying his stock purchases and more on understanding how he thinks. That's a very different message. Because investments change, markets change, technology changes, but good thinking lasts a lifetime. And perhaps that's the greatest investment of all. When Buffett was still young, he wasn't searching for shortcuts. He wasn't looking for overnight success. Instead, he developed an unusual habit. He read, constantly, business reports, company filings, newspapers, economic history, biographies, annual reports, thousands upon thousands of pages. Not because someone forced him to. Because he believed knowledge compounds. Most people understand compound interest. Invest $1, earn interest, then earn interest on the interest. Year after year, the growth accelerates. But Buffett often explained that knowledge works the same way. Every book adds another idea. Every idea connects with another. Over time, decisions become sharper. Judgment improves. Mistakes become easier to avoid. That kind of compounding cannot be seen on a stock chart. Yet it may be even more valuable. Here's the interesting part. Reading alone doesn't create wealth. Many people read. Few become exceptional investors. So what made Buffett different? It wasn't just the amount of information. It was the filter. He wasn't trying to know everything. He was trying to understand what truly mattered. This sounds obvious, but modern life rewards the opposite. We consume endless headlines, breaking news, social media opinions, market predictions, economic forecasts. Information has never been easier to access. Yet clarity has never been harder to find. Buffett built an advantage not by collecting more noise, but by removing it. That raises an important question. If information is everywhere, why do wisdom and good judgment remain so rare? We'll come back to that. Because the answer explains why so many intelligent people still struggle financially. There is another misconception about wealth that quietly shapes millions of lives. People believe income creates financial freedom. Income certainly helps, but history shows something more important. Many high earners never become wealthy. At the same time, teachers, engineers, small business owners, accountants, factory workers, and ordinary families have quietly built substantial wealth over decades. How? Not because they earned the highest salaries. Because they built systems. A system keeps working even when emotions don't. A system creates consistency. A system turns good intentions into daily action. Buffett didn't wake up each morning asking, "How can I become richer today?" He focused on making one rational decision after another. Year after year, decade after decade. Eventually, those decisions became billions of dollars. The money was impressive. The process was extraordinary. Think about planting an oak tree. For years, it seems like nothing remarkable happens. The tree grows slowly. Visitors barely notice. Some might even wonder whether it's worth waiting. Then decades pass. The roots become enormous. The trunk becomes almost impossible to move. Storms that destroy smaller trees barely affect it. Real wealth often follows the same pattern. The strongest financial foundations grow quietly. Nobody applauds disciplined saving. Nobody celebrates reading another annual report. Nobody posts viral videos about patiently waiting 20 years. But history rewards exactly those behaviors. That's why Buffett has often emphasized patience as one of the greatest competitive advantages. Because patience allows compounding to do its work. And compounding requires one thing above all else: time. Now here's something that surprises many people. Buffett's greatest investment may not have been a company at all. It may have been his reputation. Think about that. Reputation doesn't appear on a balance sheet. Banks can't print it. Markets can't crash it overnight. Yet Buffett has repeatedly spoken about protecting it. Why? Because trust creates opportunities that money alone cannot buy. Businesses prefer trustworthy partners. Investors prefer trustworthy managers. Employees prefer trustworthy leaders. Customers return to trustworthy companies. Trust becomes an invisible asset, one that quietly grows more valuable over time. In many ways, it compounds just like capital. That idea becomes incredibly important later in this story. Because some of Buffett's biggest opportunities came not simply because he had money, but because people trusted him. And those moments reveal another lesson that most people completely overlook. For now, remember this. Money is visible. Character is invisible. Money can disappear. Character often determines whether it comes back. That distinction may be one of the most important ideas in Buffett's entire philosophy. But if knowledge, patience, systems, and reputation matter so much, why do most people spend nearly all their energy chasing money instead? The answer has less to do with finance, and far more to do with human psychology. And once you understand that psychology, you'll never look at wealth the same way again. Imagine two people graduating from college on the same day. They have similar intelligence, similar opportunities, similar starting salaries. Fast forward 30 years. One has built lasting wealth, meaningful relationships, and a life with freedom. The other earns more money than ever, but feels trapped. What happened? Most people would assume the difference was income. But Warren Buffett has spent decades suggesting something else. The biggest gap between successful people and everyone else isn't what they earn. It's how they think. Because every financial decision begins long before money enters the picture. It begins in the mind. Here's something economists and psychologists have studied for years. Human beings are not naturally wired to make good financial decisions. We're wired for survival. Thousands of years ago, acting quickly often meant staying alive. If everyone in the tribe ran, you ran too. If food was available, you ate as much as possible. Waiting could be dangerous. Those instincts helped our ancestors survive. But in modern investing, those same instincts can become expensive. When markets rise rapidly, people rush in. When markets fall, they panic and rush out. Ironically, they often buy high and sell low. Not because they lack intelligence. Because they're human. Buffett understood this better than most. He realized that controlling emotions could be more valuable than predicting markets. And that's an important distinction. Most investors try to forecast the future. Buffett focused on preparing himself to respond wisely, whatever the future happened to bring. That single shift changes everything. Think about the financial headlines you've seen over the years. Markets are crashing. A new boom has begun. This stock will change everything. Don't miss this opportunity. Fear, excitement, urgency. Almost every headline is designed to trigger emotion. Because emotion gets attention. Attention creates clicks. Clicks create revenue. But Buffett has often done something almost unbelievable. He ignores most of the noise. Not because he's uninformed, because he understands the cost of distraction. Every minute spent reacting emotionally is a minute not spent thinking clearly. That's one reason he has famously preferred a calm, predictable routine over constant excitement. His edge wasn't speed, it was clarity. Now consider this. Imagine you're driving through heavy fog. You can barely see the road. Every few seconds someone in another car shouts conflicting directions. Turn left. No, right. Speed up. Slow down. Eventually, you'd stop trusting the voices. You'd rely on the road itself. Financial markets work the same way. Every day, thousands of opinions compete for your attention. Television experts, influencers, commentators, anonymous social media posts. Some will be right, many won't. The challenge isn't finding more opinions. The challenge is knowing which ones deserve your attention. Buffett solved that problem decades ago. He created what he called a circle of competence. The idea is surprisingly simple. Know what you understand, know what you don't, and never confuse the two. That sounds almost too obvious. Yet countless financial mistakes begin with overconfidence. People invest in businesses they cannot explain. They buy companies they've never researched. They follow trends they barely understand. Not because the opportunities are good, but because everyone else seems excited. Buffett chose a different path. He wasn't afraid to say, "I don't know." And strangely enough, that humility became one of his greatest strengths. Here's something many people never notice. The richest people often spend more time saying no than saying yes. Think about that. Every day brings new opportunities, new investments, new partnerships, new businesses. Most people believe success comes from doing more. Buffett has demonstrated that success often comes from doing less, but doing the right things exceptionally well. He has explained that investing isn't about swinging at every pitch. It's about waiting for the right one. Imagine a baseball game where there are no strikes. You could stand at home plate all day. You don't have to swing. You simply wait until the perfect pitch arrives. That's remarkably similar to how Buffett approaches investing. Patience isn't passive. It's disciplined decision-making. And discipline is an asset that compounds just like money. But there's another invisible asset that receives far less attention. Focus. Modern life constantly interrupts us. Notifications, emails, messages, breaking news, algorithms competing for every second of attention. Attention has become one of the world's most valuable resources. And one of its scarcest. Every distraction carries a hidden cost. Because when attention is divided, thinking becomes shallow. Deep understanding requires uninterrupted time. That's why Buffett has often protected his schedule. Not because he dislikes being busy. Because thinking is part of his job. In many ways, thinking is his most valuable investment. And perhaps that's true for all of us. The quality of our future often depends on the quality of our decisions. And the quality of our decisions depends on the quality of our thinking. Now let's pause for a moment. Imagine receiving $1 million today. Most people would say yes immediately. Now imagine choosing between $1 million or the ability to make consistently wise decisions for the next 50 years. The first option feels exciting. The second feels ordinary. But over a lifetime, the second choice could become vastly more valuable. This is where many people misunderstand wealth. They chase outcomes. Successful people build the engine that creates those outcomes repeatedly. Money is an output. Judgment is an input. Income is an output. Skills are an input. Profits are an output. Trust is an input. The world celebrates outputs because they're visible. But Buffett spent his life strengthening the invisible inputs. And those invisible assets eventually produced visible results. There's an old saying in business. The market is a voting machine in the short run, but a weighing machine in the long run. The meaning is powerful. In the short term, popularity often wins. Excitement drives prices. Trends dominate conversations. But over longer periods, reality matters. Strong businesses survive. Weak businesses struggle. The same applies to people. Someone can appear successful for a few years. Expensive car, luxury vacations, designer clothes. But time eventually weighs every decision. Did they build valuable skills? Did they earn trust? Did they continue learning? Did they adapt? Or were they simply chasing appearances? Time reveals the difference. And Buffett has always invested with time on his side. That brings us to one of the most overlooked lessons in his career. He didn't spend decades trying to look rich. He spent decades becoming valuable. There's an enormous difference. One attracts attention, the other creates opportunity. And opportunity, when repeated over many years, becomes extraordinary wealth. But this raises another question. If becoming valuable matters more than looking successful, what exactly makes a person truly valuable in the modern economy? The answer has almost nothing to do with luck. Very little to do with talent. And surprisingly, it isn't something you can buy. Because the greatest asset Buffett ever built wasn't a stock portfolio. It was a mindset. And that mindset transformed every opportunity that followed. In the next chapter, we'll explore the habits, principles, and daily decisions that quietly separate people who build lasting wealth from those who spend a lifetime chasing it. Imagine two companies. One owns expensive buildings, modern offices, and the latest technology. The other has fewer physical assets but employs people who make excellent decisions, earn customer trust, and solve difficult problems. Which company would you rather own for the next 30 years? Many people instinctively choose the first. But history repeatedly shows that the second often creates far greater value. Because buildings can become outdated. Technology can become obsolete. Money can lose purchasing power. But the ability to think, adapt, and create value grows stronger with experience. That is the asset Warren Buffett has quietly spent his entire life building. Not just financial capital. Mental capital. Mental capital isn't a term you'll see flashing across financial news. Yet it may be the most important investment anyone can make. Every book you read, every skill you master, every mistake you honestly analyze, every meaningful conversation you have, every problem you learn to solve, they all increase something invisible: your ability to create value. And once you understand this, success begins to look very different. Instead of asking, "How can I make more money?" you begin asking, "How can I become more valuable?" That single question changes careers. It changes businesses. It even changes entire lives. Buffett has often encouraged young people to invest in themselves. Not because it's motivational advice. Because it's logical. Markets can decline. Companies can fail. Entire industries can disappear. But knowledge and useful skills stay with you. No economic downturn can erase your ability to think critically. No recession can confiscate your experience. No inflation can reduce the value of your character. Those are assets that travel wherever you go. And unlike many investments, they cannot be taken away simply because the market had a bad year. This idea became especially clear throughout Buffett's career. He rarely looked for flashy businesses. Instead, he searched for companies with durable advantages. Businesses that customers trusted. Businesses with capable managers. Businesses that could continue creating value year after year. Notice the pattern. Even when evaluating companies, he focused on qualities that lasted. Not temporary excitement. The same principle applies to people. Your greatest advantage isn't how impressive you appear today. It's how consistently you improve over decades. Let's make this practical. Imagine two professionals. The first spends every evening scrolling through social media, reacting to headlines, and worrying about what everyone else is doing. The second spends that same hour reading, learning a new skill, improving communication, or understanding an industry more deeply. 1 year later, the difference seems small. 5 years later, it's obvious. 15 years later, their lives may barely resemble one another. Not because one got lucky. Because small improvements accumulated. This is compounding in its purest form. Not just money growing, a person growing. Here's something remarkable about compounding. It feels almost invisible while it's happening. That's why people quit too early. Someone starts reading. After 1 month, nothing dramatic changes. They exercise for 6 weeks. Results seem slow. They save consistently for 1 year. The balance still feels modest. So they stop. But compounding has a strange characteristic. Its greatest rewards usually arrive much later. The first half of the journey often looks disappointing. The second half can look extraordinary. Buffett understood this deeply. He didn't expect massive results every year. He trusted the process. And over time rewarded his patience. But there was another habit that separated him from the crowd. Curiosity. Most adults slowly stop asking questions. They become comfortable with what they already know. They assume experience is enough. Buffett never seemed to think that way. Even after decades of success, he continued reading, studying, and learning. Because he understood something powerful. The world changes. Technology changes. Businesses change. Human behavior changes. If your knowledge stays frozen, eventually, your decisions will too. Learning isn't something successful people finish. It's something they continue forever. This brings us to one of Buffett's most underrated strengths. Humility. That might sound surprising. After all, we're talking about one of history's most successful investors. But confidence without humility becomes arrogance. And arrogance is expensive. Buffett has openly admitted mistakes throughout his career. He has written about acquisitions that didn't perform as expected. He has acknowledged opportunities he missed. Why would someone worth billions publicly discuss failures? Because pretending to be perfect teaches nothing. Learning from mistakes teaches everything. Successful people aren't successful because they never fail. They're successful because failure becomes education instead of identity. Every mistake becomes tuition. Every setback becomes information. And every lesson improves future decisions. Think about aviation. Every major airplane accident is investigated in extraordinary detail. Not to assign blame alone, but to learn. Engineers analyze every system, every communication, every decision. The goal is simple: make future flights safer. Now imagine applying that mindset to your own life. Instead of hiding mistakes, study them. Instead of feeling embarrassed, become curious. Ask, what did this teach me? That question alone can save years of repeated errors. Buffett has often suggested that avoiding major mistakes is just as important as making brilliant decisions. Sometimes the biggest financial victory isn't earning more. It's avoiding costly errors. Now let's talk about something people rarely connect with wealth: relationships. Buffett has frequently spoken about surrounding yourself with people who are better than you. People with integrity. People who inspire growth. People whose habits quietly raise your own standards. Why? Because success is contagious. But so is mediocrity. Every environment shapes behavior. Every friendship influences thinking. Every conversation reinforces certain beliefs. The people closest to you slowly influence what you consider normal. If everyone around you spends impulsively, saving becomes difficult. If everyone around you values learning, learning becomes natural. Your environment quietly compounds too. There's an interesting pattern in Buffett's life. He didn't build success alone. His long partnership with Charlie Munger became one of the most respected collaborations in business history. They didn't agree on everything. In fact, thoughtful disagreement often strengthened their decisions. Munger challenged Buffett's assumptions. Buffett respected Munger's perspective. Together, they avoided many mistakes either one might have made alone. That's another reminder that wisdom often grows through honest conversation, not constant agreement. The strongest thinkers welcome ideas that challenge them, because they're searching for truth, not applause. So what exactly have successful people been building all along? Not just wealth. They've been building judgment, character, discipline, patience, reputation, knowledge, trust, relationships, focus, curiosity. These are the invisible foundations that eventually produce visible success. Money is simply the scoreboard. It reflects the game. It isn't the game itself. And once you understand that, you'll stop chasing money directly. You'll begin building the person capable of creating it repeatedly. But one final question remains. If these principles are so simple, why do so few people actually follow them? The answer may be the most important lesson Warren Buffett has ever demonstrated, not with words, but with the way he has lived his life. And that lesson changes the meaning of success itself. Imagine attending two different reunions. At the first, everyone is talking about salaries. Who bought the biggest house? Who drives the newest car? Who retired the earliest? Success is measured by possessions. Now imagine a different room. People talk about businesses they built, problems they solved, families they raised, people they mentored, communities they helped. The atmosphere feels different, because the scoreboard is different. And Warren Buffett has spent a lifetime reminding us that the scoreboard you choose ultimately shapes the life you build. Most people spend years trying to look successful. Successful people spend years trying to become valuable. At first, the difference is almost invisible. Looking successful brings quick attention. Becoming valuable often goes unnoticed. One is rewarded immediately. The other rewards patience. But time has a way of exposing the truth. The person chasing appearances constantly needs validation. The person building value creates opportunities that continue long after the applause fades. That's why Buffett's life has never been defined by constant excitement. It has been defined by consistency. Year after year, decade after decade, not because he predicted every economic event, not because every investment succeeded, but because his principles rarely changed. Throughout history, economies have risen and fallen. Inflation has reduced purchasing power. Recessions have frightened investors. Entire industries have disappeared. Railroads gave way to airlines. Film cameras were replaced by digital photography. Video rental stores vanished almost overnight. Technology transformed the global economy. Yet one principle remained remarkably consistent. People who continued creating value continued finding opportunity. The tools changed. Human nature did not. Trust still mattered. Good judgment still mattered. Patience still mattered. Integrity still mattered. Learning still mattered. And that's why Buffett's lessons continue to feel relevant, even in a world he could never have imagined as a young investor. Consider this simple question. If every dollar disappeared tomorrow, what would you still have? Your knowledge, your skills, your reputation, your habits, your relationships, your ability to solve problems, your ability to earn trust. Those are your real assets. Everything else is simply built on top of them. This is why people sometimes lose fortunes and build them again. They didn't lose the engine. Only the fuel. The engine, their ability to create value, remained intact. That may be the greatest financial lesson of all. There's another reason this philosophy matters. Money is an excellent tool, but it's a poor destination. Many people believe they'll finally feel secure once they reach a certain number. A higher salary, a larger investment account, a bigger business. Then they arrive, and the finish line moves again. Because chasing money without purpose is like chasing the horizon. No matter how far you travel, it always stays just ahead. Buffett has often spoken about enjoying the process itself. Reading, learning, thinking, building, partnering with people he respected. Those weren't obstacles on the way to success. They were success. The wealth simply followed. Imagine two gardeners. One spends every day painting fruit onto dead branches. From a distance, the tree looks impressive. The other quietly waters the roots. For months, almost nothing changes. Then one season, healthy fruit begins to appear naturally. The first gardener was chasing appearances. The second was building the source. Money works the same way. Income is fruit. Businesses are fruit. Investments are fruit. Financial freedom is fruit. Character, knowledge, discipline, patience. These are the roots. Healthy roots produce healthy fruit. Weak roots eventually reveal themselves. This is where many people misunderstand Warren Buffett. They search for his next stock, his next acquisition, his next prediction. Those things are interesting, but they're not the real lesson. The real lesson isn't found in his portfolio. It's found in his process. Think independently. Continue learning. Protect your reputation. Stay within your circle of competence. Remain patient when others panic. Remain rational when others become emotional. Avoid unnecessary mistakes. Allow time to become your partner instead of your enemy. Those principles aren't reserved for billionaires. They're available to almost anyone willing to practice them consistently. So, let's return to the question we asked at the beginning. What creates money in the first place? Not luck, not constant hustle, not chasing every opportunity. Money is often the byproduct of something much deeper. A person who solves valuable problems. A business that earns trust. A reputation built over decades. A disciplined mind that refuses to panic. A lifelong commitment to learning. That's what Warren Buffett spent his life building. And that's why the money followed. Here's the irony. The harder you chase money alone, the easier it is to make poor decisions. You become impatient. You take unnecessary risks. You seek shortcuts. You compare yourself to everyone else. But when your focus shifts toward becoming more capable, more trustworthy, more disciplined, more valuable, money often becomes a natural consequence instead of the primary goal. It's no longer something you're desperately chasing. It's something you're increasingly prepared to create. Years from now, you probably won't remember today's market price. You won't remember most financial headlines. You won't remember the latest trend that dominated social media. But you will live with the habits you build today. The books you choose to read. The people you choose to learn from. The promises you choose to keep. The decisions you repeat every day. Those quiet choices are writing your financial future long before the results become visible. Because extraordinary lives are rarely built through extraordinary moments. They're built through ordinary decisions, repeated with extraordinary consistency. So before searching for another shortcut, ask yourself one question: what am I building that money can't buy? Because if you can answer that honestly, you're already thinking differently than most people. And according to the life and philosophy of Warren Buffett, that difference may be the beginning of everything. If this documentary changed the way you think about money, remember this. The goal isn't to chase wealth. The goal is to become the kind of person who naturally creates it. If you enjoyed this documentary, subscribe to Money Decoded for more deep dives into investing, economics, business history, and the timeless principles behind lasting wealth. Because the world's greatest financial lessons aren't just about making more money. They're about understanding how money and success really work. And sometimes, the greatest investment you'll ever make is the one you make in yourself.